Greetings to all. This is Neel Parekh, a technical research analyst at GEPL Capitals. Welcome you to this weekly market outlook video. In this video, we are going to talk about the Nifty, Bank Nifty, and current market chart structure, as well as we'll discuss the two stocks which has a high potential to outperform in the upcoming series. So, without any further ado, let's start with the video. So this is the Nifty 50 weekly time frame scale. In this scale, we are observing that Nifty has deteriorated its 61.80 Fibonacci retracement level, which has been drawn from the April 2025 low to the top of Jan 2026. So the level was around 23,500, and on today's trading session, which is the Friday trading session, Nifty has showcased the breakdown below its 23,500 and closed near to 23,170 on the weekly basis. If you look at closely on the weekly scale, then Nifty has also breached below its 100 week exponential moving average, which was priorly historically toward the from since 2022. It was acting as a crucial support levels for the Nifty index. And on today's weekly session, Nifty has breached this level as well. So near to medium term seems to be very cautious for the traders. As of now, if you look at Nifty, immediate support level has been now placed at 22,750 and 21,700 level is these are the broader range of the support for the Nifty index. At a higher scale, 24,000 to 24,500 would be the resistance zone for the Nifty index. If you look at on the daily scale, if the series of lower tops and lower bottoms formation has been observed, and during this vertical fall, there are three gap down openings that Nifty needs to fill for the upside momentum. The momentum indicator on both MACD daily as well as on the weekly scale, it's on the bearish side and it's been heading towards the negative territory, which indicates the upside momentum has a lack of participation. So sell on rise would be a strategy to be adopt for the near-term traders at the current market scenario. Moving on to the Bank Nifty, Bank Nifty is at the make or break level at a current scenario. If you look at since the on the weekly scale, I have drawn the rising channel since 2023. Bank Nifty has been moving in high top, high bottom formation and in this rising channel. So current week, Bank Nifty has witnessed the major drawdown, which is near to at 7% weekly loss. And the MACD indicator has also witnessed the bearish crossover in the weekly scale. That defines the downside momentum has been accelerated and the price action setup seems to be 53,000 level seems to be a very important support for the Bank Nifty index. If Bank Nifty slips below this level, then it could drift toward the level of 49,500 to 48,750 level as well. On the daily scale, Bank Nifty has also witnessed the vertical fall, witnessing high lower tops and lower bottoms formation. And during this phase as well, Bank Nifty has witnessed two gap down openings in this particular vertical fall that Bank Nifty needs to fill up on the higher side. So overall structure for Nifty as well as on the Bank Nifty seems to be cautious for the near to mid-term levels. Actionable setup on Bank Nifty would be short Bank Nifty below 53,000 level for a target price would be at 52,000 and 51,500 mark. And in this case, we have to maintain the stop loss at the level of 54,500 series for the effective risk management. Now, if we look at the two stocks, which has a high potential to continue its outperformance, first one is Coal India. So if you look at the monthly scale of Coal India, it's been forming a series of higher highs formation. And during this particular market volatility, which has been witnessing from February end, Coal India has seems to be an outperformance as is maintaining its rising trend line and as well as it's respected its key short-term moving averages like 50 and 20-day exponential moving average. On the monthly scale, stock has been forming a base pattern which technically indicates the continuation of the primary upward trend. On the monthly scale, stock has also witnessed the crossover on the MACD front that defines the pickup in the momentum. If you look at the current level, the current price is at 466. We can set a target at 530 with a stop loss to maintain, and this level would be at 430 level. Second stock to watch out for the continuation of the primary upward trend would be Aster DM. So if you look at on the weekly scale of Aster DM, it has witnessed the bullish polarity shift that indicates the prior resistance of Jan 2025. It's been acting as a support level for February series. And from there, it's maintaining its higher high and higher lows pattern and respecting its key short-term moving averages like 20-week exponential moving average. And in this stock as well, MACD indicator has witnessed the bullish crossover. If we look at closely, whenever the weekly scale has witnessed the bullish crossover on MACD, the stock has witnessed a continuation of its primary upward trend and the momentum has been showcasing a rising trend. That defines the stock has been ready to continue its outperformance. The current market price is around 667. We can set a target at 800 from the current price and stop loss should maintain at the level of 615 for the better risk management. So this was the view for Nifty, Bank Nifty, and the two stocks that we like for an outperformance for the continuation of an upcoming series. So if you have any query, do comment down in our comment section and do share and subscribe to GEPL Capital's YouTube channel. Thank you.